The next company on our radar is Aarti Drugs. The shares have been under pressure after the company came out with what looked like a slightly sluggish third quarter performance. Revenue declined by 9% on an annual basis, led by lower API sales. To discuss the outlook, we have with us Adhish Patil, CFO of the company. Adhish, thank you very much for joining in. Good that you can be with us. Can you start by telling us a little more about the API segment and what was the drag there, and just break it down in terms of volumes, and also whether you see some light at the end of the tunnel? I mean, is there a turnaround in the works?
Yeah, good morning. So yes, so the API market has been a little dull, especially in exports. However, we have done around 8.5 to 9% volume growth year on year as compared to December 22 quarter. But still, the rate variance was very sharp in a negative way, almost around minus 20%. And that was the reason why you can see the fall in top line. However, because the volumes were good, we were able to maintain the bottom line. So bottom line is almost flat, even though the sales have gone down. But still, we expect more gross margin improvement. The reason behind that is that for API and Spec Chem business, for every product, there is a certain markup in absolute terms over raw material costing. So we have seen that for the last quarter, it has been exceptionally low. It will get back to the historical levels. And even if that happens, we see around couple of % gross margin improvement for the existing business. So, and another, yeah, sorry.
So just to complete the point on gross margins, what are they currently and how much can they improve to? And what will that mean for your EBITDA margins? Because currently your EBITDA margins are 11.6%, but peak margins were 14%. So just complete that point about, the margins, and then please go ahead.
Yes. So currently our gross margins would be somewhere near about 33%. But we feel that in near term, it should at least go back to around 35% levels. So that will at least push us towards the 14% EBITDA level mark, and plus the capex and new exports. Basically, what has happened last particular quarter, the export market has been really, really bad. In fact, we have seen a volume degrowth in export market as well. That is mainly because of few Latin countries and few Middle Eastern countries. We have seen shortage of dollar, but it is improving. The trend is improving. The interest rates are very high over there. So because of that, the government tenders were a little slow. The destocking, which was taking place last financial year, that is almost done now. So overall, when the exports will increase, the selling prices, the realization also increases. Typically, we have higher gross margins in export market than the domestic market. And last quarter, what has happened is that the domestic market volumes have been upwards of 20%.
So domestic volumes are up 20%, and exports, there are issues with currency, like you said. But do you see a turnaround on the export front in Q4 itself, or will it take longer than that?
We should start seeing a turnaround in exports in Q4 mostly, maybe towards the end also. But I think it should turn around pretty soon. Okay.
Adhish, also a word on your other segments. I mean, formulations have done well, though they're a smaller part of your business. But just tell us, what are the opportunities there and what's the outlook? And also a word on specialty chemicals, where the whole cycle has been extremely patchy. So for the products that you operate in, what is the outlook?
Yeah. So first, the formulation part. So there we have done excellently well for this last quarter. The export component for the formulation business is almost around 58%. And that is what we had targeted since long, with a lot of product registrations which are happening in upwards of 400 products worldwide. So that exports of formulation will remain strong. The EBITDA margins of formulation is also upwards of 17% for the quarter as well as the entire year. So that will remain strong for us. Currently, it is around 13% of the consolidated revenue, but we hope that it will grow between 15 to 20% in near term. As far as Spec Chem business is concerned, our one big plant is coming up in Saika. It got slightly delayed. We are hoping that we'll complete all the erection part by March end, and by April end, we should be able to put the first batch for the Spec Chem and intermediate product. And as our second greenfield project, which is happening in Tarapur area, that is on dermatology product. There we will be commencing in the next week itself. So Monday mostly we'll be putting up the first batch for that product.
Adhish, out of time. Thank you very much for joining in and wish you all the best. Let's hope the export market recovers, as you said, towards the end of Q4, and that should boost the company's margins too, as export realizations are higher than the domestic margins.